Yes, sir. Very happy evening to all. Sir, before I start the video for today, I'm wishing you a very happy new year. Today, Jan 1st, 2025. Sir, we are having first group exam is on 11th. If you are going to write G1 this time, this video is for you, especially with regard to the subject taxation. Sir, from today we are having 2, 3, 4 and 5. 4 days are there for the other subject. And 6, 7, 8, 9 and 10, 5 days are exclusively there for the advanced accounting. So my dear lovable students, with regard to my subject, that is taxation, which is DT and IDT, two topics are very important for any exam, not only this exam, any exam. Even after 5 years, if you are asking what is the expected question for exam, this is not expected, this is actual question for exam. Computation of total income, which will come for 14 mark to 15 mark in exam. Computation of GST payable, 10 mark. So nearly 25 mark, 25% of our paper cover these two area. And every student is expected to do this area in the examination. So my dear lovable students, we have prepared 25 past examination question from GST, and that marathon is already uploaded and many students are using that. If you are unaware of it, at least try to do 10 questions in the coming 3 to 4 days from the tax area. And with regard to computation of total income, with regard to the direct tax, I have committed to do 25 questions this time. Already part 1 has been uploaded. Below this video, I will attach that part 1. If you have not saw that part number 1, complete that part number 1. And sir, in this, I am attaching part number 2. So overall, out of 25 question, at least try 10 question, my dear lovable students. 10 question you solve. At least you try 10 question. In the sense means you have to sit and do 10 questions, then only you'll be able to execute that in the examination. The balance 15 question you can do auditing that. Okay, fine, this adjustment, this has to be done, this into this calculator work we can do, because every question we can't do by this short span of time. So my suggestion to you is utilize for 2, 3, 4 and 5, the 4 days for the tax and also for the law paper. Sir, finish it off that your preparation and give 6, 7, 8, 9, 10. This 5 days exclusively 5.5 days for the advanced accounting, which is going to be a master blaster this time. If that is the case, then 70 plus in accounts is very much possible. Sir, New Year will come and go. Any other function will come and go. But our preparation should be our preparation, my dear lovable students. The day which we are getting successful from ICAI is the real new year for us. I hope this you will carry in your heart without wasting your time. If you are preparing for next 4 days, very serious itself, you can add 40 to 50 hours for your preparation. So from my side, whatever I can do, I am uploading to help you. That's it from the presentation area. Thank you. Bye-bye from ANM. We are in the mission of completing 25 questions for in the Jan. Are you all really with me? In that we have done the set number 1, which is 5 questions. We are moving into set number 2, the another 5 questions. In that illustration number 6, a brilliant question from MTP, October 2020 is my target. From the following information provided by Mr. Raj, aged 42 years, working as a manager in XYZ Limited for the year ended 31/3/2024. Basic salary 25,000 per month. So they have given the salary information. So 25,000 into 12 comes to 3 lakh is the basic salary. DA 50% of it meant for what benefit? Retirement benefits. So 50% of basic pay 1,50,000. In this 1,50,000, 50% is for retirement benefits. So income calculation entire 1,50,000. Whereas salary definition calculation 75,000. Comfortable? Own contribution to RPF 30,000. Own contribution will not be included in the gross salary because own contribution will be contributed from the basic salary, right? But this can be claimed as deduction under ATC, right, sir? Employer's contribution to RPF 20% of the basic salary. Employer can contribute up to 10% of salary, but he contributed 20% of the basic salary. So first you have to include 20% of basic salary in the gross salary and you can claim deduction under 80 CCD subsection 2. Right, sir? But this is RPF, Recognized Provident Fund. Whose contribution? Employer's contribution. So the extra will be taxable. If it is 80 CCD, that is a provision. Right, sir? Sir, RPF, Recognized Provident Fund is different. Notified pension scheme is different. What provision we said is for the notified pension scheme. This is Recognized Provident Fund. In excess of 12% will be taxable. Interest credited in the RPF at 15% till 9.5% are exempted. In excess of 9.5% will be taxable. Arrears of rent received from XYZ Limited. Sir, this is what the takeaway of this question. There is a section called as 25A talking about arrears of rent. Arrears of rent means, sir, previous year rent I am receiving in the current year. Even though you are not the owner of the house property, in the year of receipt of the arrears of rent, that will be taxable under the head income from house property. Income from received interest 10,000 from Axis Bank savings account. You are entitled to claim deduction under 80 TTA during the year. And interest of 12040 gross from debenture of Mrs. Coal India Limited. This will be taxable under IFOS. Are you all really with me? He made payment through check 15,370 towards premium on life insurance policy. You are entitled to claim deduction under ATC. 22,500 for medical insurance policy for his major dependent daughter ATD. He contributed 1196 per month. So 1196 into 12. What is 1196 into 12? 14,352. He contributed to Atal Pension Yojana. Atal Pension Yojana is the pension scheme of the central government. Central government. So 80 CCD will be applicable. And 5,000 per month towards Suganya Samriddhi account. Suganya Samriddhi account is 80C. If you are having girl child, sir, once a girl child born, you can start an account in her name and you can deposit the money till her 18 years of age. And at the time of her marriage or higher studies, you can withdraw the money and use it for the benefit of that girl child. That is called a Suganya Samriddhi account. So if you are contributing, government is saying that we are ready to provide you deduction under 80C. XYZ Limited has taken a residential house of Mr. Raj as company's guest house and later purchased from him in the year 2020 at a market value of how much? 75 lakhs. Purchase cost was only 10 lakh in April 2008. During August 2023, Mr. Raj had sold his gold chain and diamond ring for 3,99,000, which is purchased in April 2008 for 1,13,000. Capital gain details has been given. Read it once again. Sir, XYZ Limited has taken residential house of Mr. Raj as company's what? Guest house. And later purchased from him means Raj sold. The company purchased. Company purchased and our party Raj sold. Are you all really with me? In the year 2020 at a market value of 75. Sir, if the capital asset has been sold in 2020, why it has to be taxed in our financial year? That means this will not be taxed in our financial year at all. Don't change that, sir, year and all. Comfortable? But during 23, sir, gold chain and diamond ring has been sold. Both are capital asset. Both are donation of 11,000 to Prime Minister National Relief Fund. National. Were given during the year by way of check and CII has been given. You are required to compute the total income and tax payable by Mr. Raju for assessment year 24-25. Assuming Mr. Raju is opting for other than default tax regime. That means what tax regime? Optional tax regime. Shall we quickly do the sum? So computation of total income by Mr. Raju. Sir, income from salary. It's a good calculation, man. Be with me how I am calculating the salary income. You have to help me. What is the basic salary per month? 25,000 into 12 comes to 3 lakhs. Fantastic. DA for income calculation purpose it is 50%. So 3 lakh into 50% comes to 1,50,000. Comfortable? Now employer's contribution to recognized provident fund up to how much percent allowed? 12% allowed. Actual contribution is this much. How much na? 3 lakh into 20% come to 60,000. But allowed is 12%. Allowed is 12% of the salary. Their definition of salary is there. Basic salary plus DA provided in terms of employment plus commission as a fixed percentage of turnover. What is the basic salary given in the question? 3 lakh. Plus DA if provided in terms of employment is 50% of the 1,50,000 comes to 70. So 3,75,000 is the salary, right, sir? Sir, of this salary, 12% can be contributed. Into 12% comes to 45,000. But the employer has really contributed 60,000. So over and above 12% of salary will be included as perquisite in the hands of the employee, right? So 15,000 will be included in the hands of the employee. When we discuss the salary chapter, my dear lovable students, 10.5 is leave travel concession or leave travel assistance. 10.10 gratuity. 10.10A pension. 10.10AA leave salary. 10.10B retrenchment compensation. 10.10C VRS. 10.10CC tax on non-monetary perquisite. 10.11 statutory provident fund or public provident fund. 10.12 that's why 12% recognized provident fund. Employer can contribute up to 12% of salary. And at the time of withdrawal, it is exempted under section 10.12. Comfortable? Now when interest credited in RPF, recognized provident fund, how much percent is allowed? But how much credited? So calculator, man, 15,000 divided by 15 into 4.5 is what? Extra. Right, sir? So, sir, 5.5 is what? Extra. So 15,000 divided by 15 into 5.5 comes to 5,500 is the taxable component. You can calculate in two ways. Either 15,000 divided by 15 into 5.5. That extra you will get 5,005. Or 15,000 divided by 15 into 9.5 you will get the allowed. So from the total, if you reduce the allowed, you will get the taxable. Comfortable? So you will get the gross salary 4,70,500. Is he going through what route? Optional tax regime. Is surely entitled to claim deduction under 16(1)(a). This is another highlight of this question. It is allowed under both the route. Whether it is default tax regime or optional tax regime, standard deduction is allowed, my dear. So 50,000 will be allowed. So income from salary will be 4,20,500. 4,20,500. Comfortable? That's what the first statement. Income from salary is 4,20,500. Comfortable? Coming to income from salary, I'm calculating the second head. Be with me and give me the figures. Computation of income from house property. Right. Sir, arrears of rent. Sir, there is one section called as section 25A. There is one section called as, there will be a concept of arrears of rent. Arrears of rent means, I will tell you, when you are studying in, or if you studied in college and all, you will say that, hey, in a college, arrears irukpa. Like that you will say. Right, sir? Padikkathanaal theriyala. Alright. Good. Path eludhanaal theriyala. Sir, arrears in the sense means I am supposed to get a thing now, but if I get in future, that is called as what? Arrears. In future, we will call it as arrears. So actually, actual rent received or receivable should be there. But that amount, if you are getting in future, that it is called as what? Arrears of rent. So what this chapter is saying that, sir, arrears of rent will be taxable. Under what section? 25A. Even if Mr. Raj is no longer the owner of the what property? House property. No longer the owner of the house property. Right, sir? So even though he is not the owner of the house property, because as per section 22 of the income from house property, in order to tax an income under the head house property, assessee should be the owner of the house property. It's one of the important condition. Right, sir? It is an section 25A is an exception to section 22, which is saying that even though the assessee is not the owner of the house property, still the arrears of rent will be taxable under IFHP. So 75,000 will be taxable. Less municipal tax paid by the owner, no municipal tax paid. Why you have to pay municipal tax? Because house property hai illa. Yes, sir. So you will get a net annual value 75,000. Comfortable, sir? Yes, sir. Sir, this 75,000 has not been taxed earlier. If this has been taxed earlier, my dear lovable students, you would have claimed 30% earlier. So now only you are going to tax it. Now you have to claim 30%. Very important highlight. That is not as per 24A. That is not as per 24B. That is as per 25A itself, 30% will be allowed. Because only if the house property is in live, my dear lovable students, that 24A deduction will be available. So you have to cut this. For that only I am using a wrong section and highlighting to you. that 30% deduction will be as per what A? 25A. So 75,000 into 30% comes to 22,500. So you will get the income from house property of 52,500. That's it, my dear lovable students. I finalize salary and also house property. Comfortable? My dear lovable students, there is no PGBP income because salary is there. If salary is there, PGBP won't there 99%. If PGBP is there, salary will not be there 99%. Comfortable? Sir, I am going to finalize the capital gain, man. Shall we finalize the capital gain? Computation of capital gain on sale of guest house. When you sold guest house, 2020. Why are you taxing this year? It would have been taxed that year itself. This is not an exception to 45 subsection 1. Only exceptions are 45 subsection 1A. Then 45 subsection 2 and 45 subsection 5. Neither of this category has fall. That's what they are checking. If any of this, that is what? 45 subsection 1A receive from insurance company. 45 subsection 2 conversion of capital asset into stock in trade. 45 subsection 5 compulsory acquisition of land and building. Then deferment of capital gain will be there. Even though the transfer has been happened in an earlier year, the capital gain tax will be only happen in the future year. Comfortable? But 45 subsection 1 would have attracted in the year of transfer itself. Then current year nothing to do with that. As the sale was made in year 2020, capital gain does not relate to assessment year 24-25. So nothing will be taxable as capital gain with regard to guest house. But with regard to what? Jewelry. My dear lovable students, you are having capital gain. So capital gain on what? Jewelry. Long term, since a capital asset were held for more than 36 months, because jewelry is not listed shares or basically a financial asset. Right, sir? For financial asset, 12 months is the period of holding. And jewelry is not unlisted shares or land and building. For that 24 months, it will fall under the category of other asset. So the limit is what? 36 months. Comfortable. So my dear lovable students, what is the full value of consideration? For how much rupees you have sold? 3,99,000, which is straight away given in the less indexed cost of acquisition. For how much rupees you purchased? 1,13,000. In which financial year you purchased? 8-9. What is the CAA in 8-9? 113 into you sold in our financial year. So 1,13,000 divided by 113 into 348 comes to 3,48,000. So you'll be having a long-term capital gain of 51,000. That's what I've attached here. 51,000 long-term capital gain. Getting it? Salary over, house property over, PGBP over, capital gain over, and coming to the income from what sources? Already given in the question, the same information, man. That is computation of income from other sources. Interest from savings bank account 10,000. But for this, you can claim deduction under interest on debenture will be taxable under IFRS. So income from other sources will be 22,040 is the income from other sources. So you will get the gross total income of, if you add all the 5 heads of income, you will get the gross total income, which is nothing but salary, house property, PGBP, capital gain, and IFRS. Comfortable? Let's chapter 6A deduction. Shall we finalize the chapter 6A? Everything has been given in the question and we already finalized. Just computing, sir. Sir, deduction under ATC, own contribution to RPF. This is whose contribution? Employee's contribution. This will not be included in the gross salary, but this can be claimed as deduction under ATC. How much rupees? 30,000. LIC premium, you are entitled to claim deduction under ATC. We are assuming that, it is assumed that premium does not exceed 10% or 20% of the sum assured, as the what may be. That is, it is within the limit. Otherwise, we will restrict the insurance premium paid or 10 or 20%, whichever is lower will claim. We are assuming that this amount itself is restricted. Hello, sir. Deposit in Suganya Samriddhi scheme. Every month you are contributing 5,000. For 12 months, 5,000 to 12 comes to 60,000. If you all add it, it will be less than 1,50,000. We are still in the safer position. Are you all really with me? Deduction under 80 CCD subsection 1B. You are contributing to Atal Pension Yojana. Atal Pension Yojana is the Yojana of the central government. Are you all really with me? If you are contributing to the bucket of central government, you are entitled to get deduction under 80 CCD subsection 1. In excess of 10%, you can claim it under 1B up to an amount of 50,000. But there is no order specific. You can first claim 80 CCD subsection 1B and balance in excess of 50,000. You can claim it under 80 CCD subsection 1. But the contribution itself is only 14,352. That means still you are having unexhausted balance in 80 CCD subsection 1B. Hence, sir, no need to go and claim deduction under 80 CCD subsection 1. And that is again risk because it is under the purview of 80CCE. I hope that you are able to appreciate. Sir, deduction under what? 80D. D stands for doctor. Medical insurance premium paid by check. Right, sir? This will come under set number 1. Set number 1, self, spouse, dependent children. So 22,500 can be claimed as a. Now 80G, sir, PM National Relief Fund. Right, sir? Sir, 100% deduction without any qualifying limit. And 80TT, a savings bank account allowed up to 10,000. And he is having only 10,000 rupees income. Full amount is allowed. So the total deduction will be 1,63,222. Comfortable? So from the gross total income, knock off the chapter 6A, you will get the taxable income as 5,46,040 minus 1,63,222 comes to 3,82,818, which will be round off to 3,82,820. This is less than 5 lakh and not more than 15 lakh. Surcharge will not be applicable since it is less than 5 lakh. Rebate under section 87A is available to the extent of statute limit of 12,500 or the tax payable, whichever is lower. What a clarity and what a flow. Are you all really with me? Computation of tax payable by Mr. Raju. Out of this total income of 3,82,820, is there any special income? Yes. Capital gain is there. That capital gain by selling what? Jewelry. That means provisions of 112 will be applicable at the rate of 20%. That means 51,000 into 20% come to 10,200 is the tax payable. Getting it? So 3,82,820 minus 51,000 comes to 3,31,820 is the other income. Right, sir? Against this other income, knock off the basic exemption limit. How much? 2,50,000. So minus 2,50,000 comes to 81,820. On this, pay tax at the rate of 5%. Come to 4091. Comfortable? So 10,200 plus 4091 comes to 14,291 is the total tax payable. Right, sir? Sir, this is long-term capital gain covered under 112. Against this rebate under 87A possible. And other income, sir, 87A rebate possible. So less rebate under what A? Would be the lower of 12,500 or tax liability since the total income does not exceed. So against this 14,291, I am reducing 12,500. So the subtotal will be, the balance remaining will be 1,700 and on that health and education cess of 4%, total tax liability 1863. Sir, already TDS and on debentures, TDS would have been deducted under 193 at the rate of 10%. That is what interest on securities. Right, sir? 193, 194, 194A and 194K. The entire family is a 10% family. Comfortable? So my dear lovable students, 1204 is the TDS would have been deducted. So the net tax payable is 660. And in this particular question, there is no advance tax and all and other TDS income and all. If any other TDS income, I would have reduced while calculating the total income. What a comfort I am having. I hope the same comfort you are also having. Comfortable? Very normal question, my dear lovable students. But sir, the practice of the question matters a lot. Please don't listen to the question. Please sit and solve the question. Out of 25 question by here, we have completed our 6th question. We are marking our presence as 6 by 25. We have done. In the coming class, we will be solving, sir, illustration number 7. That is another good question, MTP October 19 question. It's a normal question only, nothing big, sir. And we'll be solving, sir, the very next question, illustration number 8. It's a 4-line question. Comfortable, sir? So do this 2 question and you proceed to the next 2 question. I am comfortable, sir, from your heart. Anybody is there? Where is a grand clap? Very, very, very happy morning to all. So we are in the mission of completing 25 questions for in the JAN examination. In that we have done 6 questions. I am moving into question number 7, a similar pattern question. With regard to the questioning, there is no change. Dr. S, 56 years, you have to note the age, a resident individual, again, sir, the doctor is a resident, furnishes the following information for the previous year, 23-24. They have given the income and expenditure account. You know one thing, for a business, we will say it has profit and loss account. For a profession, we will call income and expenditure account. Both are one and the same. If receipts and payments account gives, then only we have to pick the required matter. If they have given the income and expenditure account, you have to start with the net profit as per P&L account only. There is no change. And if there is any unnecessary item debited to P&L account, should be added back straight away. Sometimes inside the necessary item, there will be unnecessary item. Like TDS would not have been deducted, cash payment exceeding 10,000 or 35,000 as the case may be, or provisions they would have created. All those stuffs you have to take care. For example, salary to staff generally allowed on the face. Cost of medicine generally allowed. Rent generally allowed. Administration cost generally allowed. Advance tax is a part of income tax. Should be what back? Added back. Membership fee generally allowed. Depreciation on apparatus generally allowed, provided if it is as per the income tax rules. If it is simply as per the books of account, should be added back, and should reduce as per the income tax rules. Comfortable? Consultation fees and income generally allowed. Cost of medicines recovered generally allowed. Stock of medicine, they have credited the stock of medicine to the income and expenditure account. Sir, interest on post office MIS, this interest should be taxable under a different head of income. Interest on time deposit, they specifically mention that it is net of TDS. This has to be taxable under a different head of income. Rent received should be taxable under a different head of income. And winning from lottery, specifically they mention that net of TDS should be taxable under different head of income. So these items should not credited to the income and expenditure account or P&L account as the case may be. But these items has been credited to those. So you have to remove from the PGBP and you have to include under the respective head other information. Depreciation as per the income tax rules to be computed as follows. WDV as on 1/4/2023 is how much lakh? 3 lakh. So they have given the opening WDV and rate of depreciation is 15%. That means we are supposed to calculate the depreciation amount, which is nothing more, which is 3 lakhs into 15% comes to 45,000. Cost of administration include, actually cost of administration has been debited to what account? Income and expenditure account. This include 3,000 paid for municipal tax for the house let out to a tenant. So this is not a PGBP expenditure, but this has been debited to the income and expenditure account, should be in the back, and it has to be reduced while calculating the income from house property. Cost of lottery ticket amounting to 350 has not been debited to income and expenditure account, should not be debited to income and expenditure account. First of all, it is not a business expenditure, and even it is not an IFOS expenditure also, because it cannot be claimed as a deduction. Against the casual income, no deduction will be allowed. He received salary of 1,50,000 and commission of 50,000 from a nursing home in which Dr. Mrs. Saxena is also an equal partner. Fine. No TDS was deducted. That means from a partnership firm, she got salary of 1,50,000 and commission of 50,000. We all know that if a partner is getting any remuneration from a partnership firm, that has to be taxable under profits and gains of business or profession. That salary will not be taxable under income from salary, because in order to tax it under income from salary, there should be employer and employee relationship. Right, sir? He received fees of rupees 50,000 from University of Chennai as lecturer. So she went to University of Chennai and taken some class. Sir, she is having partnership firm. She is having her own practice, my dear lovable students. If that is the case, those income will be taxable under profits and gains of business or profession. So since this lecture income will be other income, which will be taxable under income from other sources. Received pension of 84,000 against life insurance come pension plan of what? LIC. So she has deposited some amount with LIC that has been matured, and that amount of 84,000 has been received. He paid lump sum payment of 1,05,000 by check as Mediclaim insurance premium for how many years? 3 years for self and his wife medical treatment. This is a very good adjustment. This is one of the takeaway of this question. Mark this adjustment as important, because he paid lump sum payment. Lump sum payment means in one shot she has paid 1,05,000 rupees by check by way of Mediclaim insurance for how many years? So when you pay Mediclaim under 80D, if you paid for more than 1 year, you have to divide it by the number of years to get the annual premium, and that will be restricted to 25,000 rupees or 50,000 rupees as the case may be. He paid LIC premium of 80,000 for his own life against the policy taken on 1/12/2017, surely after the cutoff date. Sum assured is 10 lakh. You have to restrict that to 10%. 10 lakh into 10% come to 1 lakh or 80,000, whichever is lower. He has deposited 1,20,000 in PPF. Again, you are entitled to get ATC. He purchased 300 shares in C Limited on 12/1/2017 at a cost of 2,500 per share. The fair market value of this share is on 31/1/2018 is 1,800. In the immediately preceding question, we have talked about the cutoff date of 31/1/2018. He sold all the shares of C Limited on 15/7/2023 for rupees 3,200. You are required to compute the total income and tax payable thereon by Dr. Saxena for the assessment year 24-25. Assume that he does not opt for 115 BAC. That means, sir, he is only traveling through the optional tax regime. That means whatever benefit are available under the Income Tax Act can be claimed as deduction. Comfortable? This is a MTP October 2019 question. I am starting with the solution. I already informed that whenever you are writing the answer computation of total income, first write all the heads of income. That is income from salary. Actually, there is a salary income. Students will confuse and will put that salary under the head income from salary. You should not do, because if a partner is getting any income from a partnership firm such as salary, commission, brokerage, remuneration, etc., should be taxable under the head profits and gains of business. Or if you are having any doubt, go and refer section 28. That is a charging section. Are you all really with me? Section 28 charging section is only clarifying that if any partner is getting any income from the partnership firm, that should be taxable under the head PGBP. Should not be taxable under the head income from salary. Why? Because what is the logic? In order to tax it under income from salary, as per section 15, there should be employer-employee relationship. There is no employer and employee relationship between a partnership firm and a partner, because both are one and the same. Are you really with me? So will not be taxable under the head. Salary should be taxable under the head PGBP. That's why salary head is 0. Next one, income from house property. Actually, that income from house property has been credited to the P&L account, technically income and expenditure account. So you have to reduce it or remove it, my dear lovable students. Then you have to calculate. So computation of income from what property? House. What is a gross annual value? Rent received, treat it as fair rent, because no other information is given. Since it is a let out property, the actual provision is fair rent or municipal value, whichever is higher. Whichever is higher, or standard rent, whichever is lower, that answer is called as expected rent. Expected rent or actual rent received or receivable. So 20,000 was credited to income and expenditure account. Less municipal tax paid by the owner. Yes, actually municipal tax has been paid by the owner and debited to the income and expenditure account. Because of that, PGBP expense would have been increased. It should not increase. So should be added back under the PGBP. And should be reduced under the... So from 20,000, if you reduce 3,000, the net annual value will be 17,000. On that 17,000, 30% of the net annual value deduction under section 24A comes to 5,100. And interest on loan, there is no IOBC has been given in the question. So you will get the income from house property as 11,100. That's it. 11,900 is the first head. Comfortable? The hero, profits and gains of business or profession. Sir, you have to start with net profit as per P&L account, my dear lovable students. So computation of profits and gains of business or profession. If it is business, they will give P&L account. If it profession, they will give the income and expenditure account. Let it be there. Net profit as per income and expenditure account. What is given in the question? 6,70,000. Add depreciation charged. Because this depreciation is not the depreciation as per the income tax rules. This is the depreciation as per the books of account. Should be in the back. Add municipal taxes paid, because this is not the PGBP expenses. This is the income from house property expenses. So because of debiting this item to the P&L account, or rather income and expenditure account, the net profit would have been reduced. Should not reduce and should be in the back. Added back. And add advance tax, my dear lovable students. As we already studied that any income tax debited to P&L account should be added back. Advance tax is also a part of income tax. So any income tax debited to P&L account should be, so 1,40,000 should be in the back, added back. So net to net, 1,85,500 should be added back. Less rent received, because this should not be taxable under the head PGBP. Because of crediting this income in the income and expenditure account, my net profit would have been increased. That's why I'm reducing 20,000. Comfortable? Interest on post office, sir, 86,400 will not be taxable under the head PGBP. Because of crediting this in the income and expenditure account, my net profit would have been increased. It should not increase. I am manually reducing it. Getting it? Next one. Interest on terms deposit with bank. Sir, this will not be taxable under the head PGBP. They specifically said that this is net of TDS. But only 27,000 has been credited to the income and expenditure account. So to that extent only, sir, net profit would have been increased. So when you are correcting the PGBP, you should reduce only 27,000. But when you are taxing under the head IFOS, you have to add the TDS and you have to show the gross income. And after calculating the tax payable, whatever TDS they have deducted should be reduced. Everywhere, are you able to appreciate? Winning from lottery will not be taxable under PGBP, but this amount has been credited to the income and expenditure account, my dear lovable students. Because of that, net profit would have been increased, should not increase. So they specifically mentioned that net of TDS, that is irrelevant for me from the angle of PGBP. When I am calculating PGBP, whatever amount credited to P&L account should only be what? Reduced. That means 7,000 has to be reduced. But when I am, sir, including it as an income under the head what? IFOS, my dear lovable students, I will be showing, sir, gross. Fantastic. Let's depreciation as per Income Tax Act. They have given the opening WDB. What is opening WDB given? 3 lakhs. 3 lakhs into how much percent? Comes to only this much depreciation will be allowed as per the income tax rules. So I have to reduce 45,000. So 1,85,000 net to net I am reducing, man. So my dear lovable students, what is the net profit as per income and expenditure account? 6,70,000 plus 1,85,500. I have to add back because unnecessary item debited to the P&L account. And minus 1,85,400. The other head of income which has to be taxed has been credited to the P&L account or income and expenditure account. Add salary from nursing home as partner. Salary from nursing home as partner. Yes, sir. I already mentioned you that any salary received from a partnership firm in the hands of the partner, it should be taxable under the head profits and gains of business or. But this amount has not been credited to the income and expenditure account. If this has been credited, the net profit would have been increased. That's why I'm adding 1,50,000. Getting it? Add commission from nursing home as partner. How much, man? 50,000. Sir, the same explanation will be applicable. Any remuneration received from a partnership firm to a partner will be taxable under the head PGBP. Actually, this has to be credited in the income and expenditure account, but this has not been credited in the income and expenditure account. My dear lovable students, so this 50,000 should be manually added back. So the income from business or the income taxable under profits and gains of business or profession will be 8,71,000. Getting it? We have finalized salary, we have finalized house property, we have finalized PGBP. Now I am moving into the capital gain. Yes, there is a capital gain item. During our financial year 23-24, they sold one of the capital asset, which is nothing but computation of capital gain, long-term capital gain on sale of land. Sir, have they sold land or the shares? Shares. On the sale of shares. Make it to shares. Long-term capital gain covered under section 112A. As we all know that if the asset is a super asset, then 112A provisions will be applicable, which is nothing but listed shares, then units of business trust and equity, units of equity oriented fund. For these three item, provisions of 112A will be applicable if it is long term. And if it is short term, provisions of 111A will be. So the cost of acquisition of equity shares of C Limited would be 2,500, being the higher of actual cost 2,500 and 1,800 being the lower of the fair market value as on the cutoff date 31/1/2018 and the actual consideration 3,200. Let me ask you a question. In the last class, in the last example, you have discussed how to find out the cost of acquisition for a super asset which has been acquired before the cutoff date, which is the full value of consideration or fair market value as on the cutoff date, whichever is lower. What is the full value of consideration? 3,200. 3,200. What is the fair market value as on cutoff date? 1,800. Whichever is lower is 1,800. What is the actual cost of acquisition? Actual cost of acquisition before is 2,000. You have to take whichever is what? Higher. So 2,500 is the cost of acquisition as per section 55. Because section 55 is talking about cost of acquisition and cost of improvement. Comfortable? So you tell me what is the full value of consideration for really how much rupees you sold? 3,200. What is the cost of acquisition as per section 55? 2,500. So 3,200 minus 2,500 comes to 700 rupees is the long-term capital gain you have achieved for every one share. Sir, you should clearly know how to compute the cost of acquisition. If any super asset has been acquired before the cutoff date, then the fair market value, sir, as on date of cutoff, or full value of consideration as on today, whichever is lower. Repeat once again the provision. Fair market value as on date of cutoff date, or full value of consideration as on today, whichever is lower. Whichever is lower, or actual cost of acquisition, whichever is higher. Whichever is higher. Comfortable, sir? This is what, my dear lovable students, the cost of acquisition. So now I am calculating the capital gain for really how much rupees you sold the asset? 3,200 minus what is the real cost of acquisition? So every share would have earned a profit of 700 rupees. How many shares are there? So 700 into 300 comes to 2,10,000. This is what long-term capital gain covered under 112A. Comfortable, sir? This is how we have arrived capital gain 2,10,000. And for that capital gain, in excess of 1 lakh will only be taxable at the rate of 10%. Comfortable? Now, income from what sources? Other sources. Actually, already everything has been given in the question. My dear lovable students, sir, computation of income from other sources. First one, interest on post office. Interest on post office, how much? 86,400 were credited to the income and expenditure account. I removed from PGBP and included under the interest on term deposit with bank. Sir, how much rupees actually credited? 27,000. You tell me bank would have deducted 10% TDS, right, sir? Under section 194A, interest other than interest on securities. So this will be 90%. Comfortable? So calculator, 27,000 divided by 90% comes to 30,000 is a gross income to be included under the head winning from lottery. How much credited? Again, this will be 70%. Because under 194B, Bhagya, sir, TDS would have been deducted 30%. So 7,000 divided by 70% comes to 10,000 rupees is the winning from fees from University of Chennai. This is other income. Why? Because she is having business income. If she is having business income, she is not a teacher, full-time teacher. If she is a full-time teacher like me, I would have included my income under the head profits and gains of business or profession, but she's doing that for time pass, so that income will be taxable under IFOS. And pension from LIC will be taxable under the head income from other sources. So the income, total income from other sources comes to 2,60,400. Are you getting it? If you add all the 5 heads of income, you will be getting gross total income of 13,53,300. 13,53,300. Are you all really with me, sir? Which is nothing but salary plus house property plus PGBP plus capital gain and other sources. Let me complete this. Yes, sir. Gross total income over, sir. Shall we reduce the chapter 6A? Yes, sir. Be with me to when I am calculating the chapter 6A. Computation of chapter 6A deduction. Investment in PPF is entitled to claim deduction under NSE. Fantastic. Life insurance premium paid fully allowable since it does not exceed 10% of the sum assured. Because 10 lakh into 10% comes to 1 lakh. 1 lakh or 80,000, whichever is lower comes to 80,000. Sir, 1 lakh 20,000 plus 80,000 comes to 2 lakhs. But it will be restricted to as per section 80 CCE. Now deduction under, sir, 80D. Right, sir? Medical insurance premium for self and his wife pertaining to the previous year 23-24 is how much? 35,000, because they paid lump sum for how many years? So 1,05,000 divided by 3 comes to 35,000. Right, sir? Sir, being 1/3 of 1,05,000 the lump sum premium. Since the policy was in force for how many previous year? This is a takeaway of this question. When you are paying 80D for more than 1 year, divided by life. If it is for 3 year, divided by 3. If it is for 5 year, divided by 5. Now you got 35,000. What is the age of that person? 56. That is less than 60. That means the maximum deduction will be restricted to 25,000. Comfortable, sir? So, மேலே 80C ல ஒரு 1,50,000 plus 80D ல ஒரு 25. So, the total deduction will be 1,75,000. Comfortable? So, my dear lovable students, that's what the chapter 6A deduction is all about, 1,75,000. What is the taxable income? That is 11,78,300. 11,78,000, which is 13,53,300 minus 1,75,000 comes to, sir, 11,78,300 is the taxable income. Shall we calculate the tax, man? Sir, components of what income? Total income. Sir, if there is any special income which is taxable at 30% or in excess of, sir, 1 lakh will be taxable at 10%, such items are there. 112A la evlo? 2,10,000. Winning from lottery chargeable at special rate of 30%. How much? So, normal income is 9,58,000. So, this is the split of the total income. Now, then only I am going to calculate the tax payable. Okay, ba? Yes, sir. Computation of tax payable by Dr. Saxena for the assessment year. Sir, endha varsham pa? 24-25. Because 23-24 is our year. 24-25. Yes, sir. Don't disturb. Tax on long-term capital gain under 112A at the rate of 10% in excess of how much lakh? 1 lakh. So 2,10,000 minus 1 lakh comes to 1,10,000 into 10% comes to? Comfortable? Tax on winning from lottery at 30% under section 115BB, 10,000 into 30% comes to? Comfortable? Tax on remaining income, which is 9,58,300. What route, man? Optional tax. Up to 2.5 lakhs, nil. 2.5 lakhs to 5 lakh. The gap is 2,50,000. At the rate of, come to 12,000. 5 lakhs to 9,58,300. At the rate of, comes to 91,660. Total tax payable comes to 1,04,000. So 11,000 plus 3,000 plus 1,04,160 comes to 1,18,000 into 4% says 4,726, man. So you will be getting total of 1,22,886.40. Comfortable? Already under 194A, 3,000 rupees TDS would have been deducted. Already for 194B, 3,000 rupees TDS would have been deducted. To total 6,000 rupees TDS would have been deducted. Already question specifically said that advance tax paid how much? 1,40,000. So 1,40,000 plus 6,000 means 1,46,000. Comfortable? But the tax payable is only 1,22,886. Can be round off to 1,22,890. Minus 1,46,000 means it will lead to refund of 23,110 is a net tax refundable because extra tax we have paid by way of TDS and advance tax. We are having some more, sir, notes. Note number 6. Advance tax is not allowable as deduction. Why? Because any income tax debited to P&L account should be advance tax is a part of income tax. As per section 58.4, 58, we know that under IFRS 56, 57, 58 and 59. What is 56? Charging section of IFRS. 57, deduction. 58, that's what disallowance. As per 58 subsection 4, no expenditure can be allowed against winning from what? Lottery. Therefore, amount spent on lottery ticket being 350 cannot be allowed as deduction from income from winning of the lottery. Depreciation of apparatus, opening WDV is 3 lakh into 15% comes to 45,000. So automatically closing WDV will be 2,55,000. Any salary, bonus, commission or remuneration by whatever name called due to or received by a partner of a firm from the firm shall not be treated as salary, but it shall be treated as income from business or profession for the purpose of section 28. 28 is the pension from LIC is taxable as income from other sources. A beautiful question, man. Like this only, one 14-mark question will be there as the opening question. Comfortable? Actually, what you are supposed to do is, sir, you do either of the two. Actually, I am in the second part of the computation of total income. If a student is going to write in Jan, sir, if you are not able to do all the 25 questions, still okay, fine. But, sir, either of the two you should do. Either you should solve the question by your own prior to listen to the video, and for explanations or additional point, you can listen to my video. Or immediately after the video, take a pen, pencil, rubber cutter and all, sit and spend the time for 20 minutes. Solve this question by your own without discussion. Then only you can improve your skills. Then my dear lovable students, sir, you can do this 14 mark question. You know, 14 into 1.8 stands for 25 minutes is the maximum time that you can allowed in the examination. So the same way, sit, since I have explained this question, you know all the adjustments. Try to finish it off with 20 minutes in your home or at class, whatever it may be. Otherwise, you will hear a lot of things. Again, the same adjustment come in examination, you'll be having a lot of doubts. You know one thing, sir, if you want to reduce your doubt, you have to do the thing in the life. If you do the thing, then the doubts will get reduced. So with this, we can proudly say that we are done with illustration number 7. 7 by 25 is the target. As you all know that, once you quickly complete that, the next question, illustration number 8, is a very small question. I will complete that illustration number 8. I am with you from your heart. Anybody is there? Where is a grand clap? Yes, sir. Very, very, very happy morning to all. Sir, we are in the mission of completing 25 questions of computation of total income for in the Jan. Right, sir? In that we have done 7 questions. We are into question number 8. Very small question. MTP November 2021 question. Sir, Mr. Vikas hold shares carrying 33% voting power in ICAI Limited. Okay, fine. That means Vikas is having substantial interest. Anyone who are holding more than 20% voting power, then we can say that they are having substantial. Mrs. Ringi is working as an accountant in ICAI Limited. In the same company, Mrs. Ringi is working, getting income from salary computed of rupees 4,60,000. They themselves said that computed, so don't reduce standard deduction 50,000. Again, this is the highlight of the thing. Without any qualification in accountancy, she don't even know debit what comes in, credit what goes out. Debit all expenses and losses, credit all incomes and gain. Debit the receiver and credit the giver. Still, she is named as the accountant, that too chief accountant of that organization. Mr. Vikas also receives 35,000 as interest on securities, should be taxable under IFRS. Mrs. Ringi owns a house property which she has let out. That will be taxable in her hands as income from house property. Rent received from tenant is 6,000 per month. So you will easily get 6,000 into 12. 72,000 as a gross annual value. From that reduce 30%. Compute gross total income of Mr. Vikas and Mrs. Ringi for assessment year 24-25. Sir, my doubt after reading this question, Vikas is a person, fine. He is having substantial interest in a concern called as ICAI Limited. Right, sir? In the same concern, Mrs. Ringi is getting salary. Is Vikas and Ringi are husband and wife? Nowhere they said. If they said that Mrs. Vikas, okay, fine. This is Mrs. what? Ringi. Pinky Ringi. But still, the answer they have written in the assumption that they are spouse, husband and wife. Hello, sir? And they have done the clubbing of income. Since Mrs. Ringi is not professionally qualified for the job, clubbing provision shall be applicable. So, computation of gross total income of Mr. Vikas. So, when are you taxing the finalizing the income of Mr. Vikas, you have to include even the salary income of Mrs. Vikas also. Income from salary of Mrs. Ringi computed is how much? 4,60,000. Income from other sources, interest on security, this is own income of Mr. Vikas, that is 35,000. So the gross total income comes to 4,95,000. Comfortable? So what is the provision we have to recall in this question? Sir, if one spouse is there, if that spouse is having substantial interest in a concern, from the same concern, sir, the another spouse is getting some remuneration or salary without any professional qualification, that income will be clubbed in the hands of the person who are having substantial interest. This is what the clubbing provisions rules are. Are you able to recollect? Yes, now, income from salary of Mrs. Pingy computed. Income from salary already clubbed in the hands of Mr. Vikas as per 64 subsection 1 clause 2, because that section is only talking about the clubbing of income of the spouse. Right, sir. Income from house property, GAV 6,000 to 12 comes to how much? Less LT bar MT, no information has been given, so NAV becomes 72,000. Right, sir? Deduction under section 24A, 30% of NAV, which comes to 21,000. There is no IOBC detail. So the income from house property will be 50,400. Comfortable? So the gross total income of Mrs. Ringi is 50,400. Sir, you can write an assumption that it is assumed that, sir, Mrs. Ringi is the wife of spouse of Mr. Vikas. Otherwise, no need to give two information together, no. Yes, sir. Adutha wife for details ore question la tarno. Taravendiye? So it's having a basic NSR assumption that both are spouse. And the other spouse income will be clubbed in the hands of the other spouse. And this is a 4-mark question. Quickly they may ask in exam from the clubbing of income. So quickly do the sum illustration number 8 and we'll be doing illustration number 9. A good question for exam. Look at here. It's an MTP April 2024. MTP March 2023, and this question has came in April 2019 also. A very good question, expected question. A normal question only, nothing big, but still we'll be solving question number 9. I'm waiting here. Quickly write that sum and come back. Very happy morning to all. So we are in the mission of completing 25 question for in the Jan exam. In that 8 question we have done and we are moving into the 9th question, computation of total income. One of the good question available for predominantly from the salary chapter. Miss Priyanka, General Manager of ABC Limited, Mumbai, furnishes the following particulars for the financial year 23-24. Salary 40,000 per month, basic salary. So basically 40,000 into 12 comes to 4,80,000 is a salary income. Value of medical facility in a hospital maintained by the employer. Sir, medical facility can be provided in 2 places, either in India or outside India. In India, 3 places are fully exempted. Number 1, hospital maintained by the employer, CIT approved hospital and government hospital. Hence, nothing will be treated as perquisite. Rent-free accommodation owned by the company. Wow. Since it is owned by the company, it is based upon population. As we all know that our year undergoes an amendment for the first 5 months and the remaining 7 months. So for the first 5 months, you have to calculate 15% of salary if the population is more than 25 lakhs. So Mumbai is a high class city. So surely high percentage will be applicable. So for the first 5 months, 15%. And for the remaining 7 months, 10%. So you have to calculate split wise. That is a takeaway of this question. The similar adjustment can be asked for our exam also. When they say RFA is owned by the company, then you have to apportion based upon the population. For the first 5 months, it is 15% of salary. And for the next 7 months, it is 10% of the salary. Very good point for examination. Housing loan of rupees 7 lakh given on 1/4/2023 at the interest rate of 6% per annum. No repayment made during the year. The rate of interest charged by State Bank of India as on 1/4/2023 in respect of housing loan is 9. So the SBI is providing 9.5%, my dear. But our employer has provided at 6%. So there is a benefit of 3.5%. Right, sir? This 3.5% will be treated as perquisite in the hands of the employee. So loan amount 7 lakh into 3.5% will be the perquisite. A dining table was provided to Miss Priyanka at her residence for her usage. Fine. So as we all know that if it is for usage, 10% of the original cost of the asset will be treated as perquisite. This was purchased on 1/6/2020 for rupees 60,000 and sold to Miss Priyanka on 1/5/2023 for 30,000. Very good adjustment. In one adjustment itself, usage provisions will be applicable and also transfer provisions will be applicable. You have to calculate both. Personal purchases, very important. This is personal purchases through credit card provided by the company amounting to 10,000 was paid by the company. No part of the amount was recovered from Ms. Priyanka. That means absolutely it is a perquisite because for personal expenses, company has spent how much? 10,000 rupees. A Maruti Suzuki car which was purchased by company on 16/7/2021 for 2,50,000 was sold to the assessee on 14/7/2023 for 1,60,000. What a brilliant adjustment it is. I will explain to you again a transfer adjustment. Other income received by assessee during the previous year 23-24. Interest on FD with the company 7,000 will be taxable under IFRS. Income from specified mutual fund. Mutual fund income will be taxable under IFRS. Interest on bank FD with minor married daughter 4,000 has to be clubbed in our hands. But when you are clubbing, 1,500 has to be reduced. Less deduction under 10 subsection 32. Deposit in PPF account made during 23-24 is how much? 40,000. Compute the gross income of Miss Priyanka for assessment year 24-25 if she exercised the option of shifting out of the default tax regime under 115 BAC. Comfortable? Very good question according to me. Because lot of takeaways are there in this question, even though it's a very small question. First, I am calculating income from salary. That is a key. Computation of salary income of Miss Priyanka for assessment year 24-25. Understanding the takeaways. First one, salary. What is the per month salary? So 40,000 into 12 comes to 4,80,000. Comfortable? Medical facility in the hospital maintained by companies exempted. So nothing will be included in the gross salary. Settled with this provision? Rent-free accommodation, my dear lovable students. Sir, rent-free accommodation, either the accommodation can be owned by the employer or taken on lease or provided in hotel. This is accommodation is owned by the employer. If the accommodation is owned by the employer, it is based upon population. In our financial year 23-24, they have changed the RFA rules for the first 5 months and the remaining 7 months. For the first 5 months, sir, the top is 15% of salary. For that, there is a definition for salary, my dear lovable students. The salary will be like this. This is a definition. Salary means basic salary plus DA if provided in terms of employment plus bonus plus commission plus all taxable allowances. Plus all taxable. My dear lovable students, sir, the basic salary given in the question is 4,80,000. 4,80,000. There is no DA details. Bonus is not there. Commission is not there. There is no such allowances are there. Only perquisites are there in the question. That means salary for the definition of RFA comes to 4 lakh. This has to be classified into two categories, my dear. First 5 months and next 7 months. Comfortable? So 4,80,000 into 15% into 5 by 12. That is for the first 5 months. Then here 4,80,000 into 10% into 7 by 12. Comfortable? So calculator man, 4,80,000 into 15% into 5 divided by 12 comes to is the value of perquisite for the first 5 months. And next one, 4,80,000 into 10% into 7 divided by 12 comes to 28,000 is the value of perquisite for the next 7 months. So 30,000 plus 28,000 comes to 58,000 is the value of perquisite. That's what they have calculated. Brilliant adjustment. One of the expected adjustment for our exam, January exam. Comfortable? So rent-free accommodation, 15% of salary from start of the year 1-4 to 31-8 and 10% of salary from 1-9 to 31-3, which is nothing but 4,80,000 into 15% into 5 by 12 plus 4,80,000 into 10% into 7 by 12. Comfortable? That's it with regard to 58,000. Coming to the value of perquisite of interest on loan, tell me what is the amount of loan? 7 lakhs. 7 lakhs is the amount of loan into. Tell me, my dear lovable students, what is the rate charged by SBI? 9.5%. What is the rate charged by employer? 6%. So what is the gap? 9.5 minus 6? 3. That means, my dear, 7 lakhs into 3.5% comes to 24,500 is a taxable perquisite. The difference between the SBI rate and the employer rate will be treated as the concessional. Are you really with me? So value of perquisite of interest on loan, 9.5% is taxable, which is to be reduced by actual rate of what charge, man? Interest charge. So the difference between the SBI rate and also the employer rate will be taxable as perquisite. Shall I proceed? Now, with regard to dining table, you should be very careful with the salary adjustment. This may be coming as MCQ also, 1 mark, or this may be coming in, in computation question, mandatory area for exam. Give your heart and soul for the concentration. This is a sure shot area for exam. Will be there in the question paper this time. Sir, actually dining table is there, right, sir? What is the cost of the dining table? 60,000. Actually, what has happened to the dining table is, sir, first they have given for usage and they have transferred the dining table. Are you all really with me? Since it is for usage, my dear lovable students, 10% of the original cost of the asset, which is nothing but 60,000 into 10% into 1 by 12. Because they transferred on the date of transfer is equal to 1/5/2023. Getting it? That means very simple. 60,000 to 10% come to 6,000. Divided by 12 comes to 500. So 500 rupees is the value of perquisite for what? Usage. Now you have to check the transfer provision. 3 assets can be transferred by the employer. Number 1, motor car. Number 2, electronic gadgets, computer and other electronic gadgets and other assets. This will fall under the category of other asset. For other asset, sir, it is 10% SLM. 10% SLM. Don't stop with 10% SLM for every completed years. That is a key. For every completed years. That means, sir, if it is first one motor car, 20% WDV for every completed years. 50% WDV for every completed years. 10% SLM for every completed years. So, what is the date of purchase of this asset? Date of purchase is equal to question given 1/6/2000 and 2020. This is the date of purchase, right, sir? So, I have to calculate the completed years. How I have to calculate? Now, 1/6/2020. Okay, va? To, sir, that fifth month, that is 1/6 na, actually it should be 1/6/2021. 1/6/2021. 1/6 na which month? June month. Just come to the earlier month. May 30 or 31? May 30 or 31? So 31/5/2021. So one completed year has been done. Comfortable? Next one, sir. Again 1/6/2021, which is that very next day after 31/5, which comes to 31/5/2022. Sir, second year has been fully completed. Very important provision for exam. Sir, then 1/6/2022 till 31/5/2023. That is our year. When they have transferred 1/5. Sir, but is this third year completed? Not completed. That means there are only 2 completed years are there. That means you are supposed to reduce only 2-year depreciation. Sir, then for the remaining 11 months and all, this is not PGBP to calculate 180 days or less than 180 days. So this year, nothing, no such concept will be. So my dear lovable students, what is the cost of the asset? 60,000. Less depreciation at what method? SLM. For how many years? 2 years. Sir, up 60,000 into 10% into 2 years comes to 12,000. Up 60,000 minus 12,000 means 48,000 is the cost of the asset after depreciation. Getting it? Up actually the employee should have paid 48,000 rupees. But less amount recovered from employee. How much? 30,000. Oh my God. 48,000 rupees worth asset has been transferred to the employee. For how much? 30,000. That means 18,000 is the value of perquisite. So 18,000 will be taxable in the hands of the employee as perquisite. Very important adjustment for examination. Comfortable? Sir, look at here. Sir, perquisite on sale of dining table. Cost is how much, man? 60,000. Less the depreciation on straight line method and 10% for how many years? 2 years. That is 6,000 into 2 comes to 12,000. So WDV comes to how much? 48,000. But amount paid by SS is 30,000. The coming is 18,000. Shall I proceed further? So for the same asset, what and what is coming? Usage and transfer is coming. For 1 month they have used it. So for that 500 rupees usage perquisite will be coming. And actually during our year itself they have transferred, so transfer perquisite will also coming. Sir, purchase through credit card. You tell me personal expenditure of the employee has been met by the employer. That should be included as a perquisite. So 10,000 has been included as perquisite. Sir, if you are having any doubt with regard to the dining table, in this question with God's grace, they have given one more transfer entry to make you clearly understand. Don't worry. A Maruti Suzuki car which was purchased by company on 16/7/2021. 21. For how much? Was sold to SSE on 14/7/2023 for 1,60,000. First of all, is this usage or transfer? Transfer, because sold, yeah. Transfer of motor car. Motor car is what category, man? 20% WDV category. Since dining table is other asset, we have taken 10% SLM basis. Hello, sir. What is the cost of the asset? 2,50,000, right, sir? What is the date of acquisition of the asset? 16/7/2021. What is the date of transfer? 14/7/2020. Oh my God. I'm going to calculate the completed year, shall we? Which is nothing but 16/7/2021 to 13/7/2023. Because this is 14, no. Date of transfer is 14, no? Just one day before. This is what? Sir, 22. 22. This is 22. Hello, sir. This is completed 1 year. This is 14, no? 14/7/2023 is the convert. Transfer date, po? 14/7. So, 1 day before is, sir, 16/7. They have what? Started, they have purchased, One completed year will be, sir, 15/7, 15/7/2022, 15/7/2022 will be the completed. Yena 16/7 they started. Actually 16/7 varnum adutha varsham. But that day will not be included. Just 1 day before. What is 1 day before? 15/7/2022. Comfortable? Again 15 mudicha next date when it will start? 16/7/2022. Actually it should come 15/7/2023 should come. But எப்பவே வித்துட்டாங்க. Oh my God, the second year has not been completed. That means for that asset only 1 year depreciation can be reduced. Appreciate பண்றியா? So cost of asset is 2,50,000 less depreciation at 10% or 20%. Under what method? WDV method, which comes to 50,000 rupees because 2,50,000 20%. What is the WDV after depreciation? For this asset only, assessee has paid less amount recovered from employee. 1,60,000. What is the gap? 40,000 will be treated as value of perquisites. That's what we are going to see with the motor car man. 40,000 rupees is the answer for the original cost of the car. Comfortable? Very important adjustment in salary man. Without understanding this, don't go to exam. You should know how to calculate the perquisite on transfer of the asset. So, cost of the asset is 2,50,000. Less depreciation from 16/7/2021. That is the date of purchase of the asset. Till 1 day before, which is 15/7/2022 at the rate of 20%, 50,000. You may have a doubt, why sir, next year depreciation has not been provided because it is not completed years. In PGBP we are following 180 days concept. In salary we are following completed year concept. If the year is fully completed, then only the assessee is entitled to claim the depreciation. Sir, for the remaining period, sir, okay fine, the year is not completed, still 11 months is there, no? Is it accounts? Is it accounts to provide depreciation for 11 months? No, I am your tax teacher. Hello sir. If completed year is there, you provide the depreciation. Hello sir. Because why the Income Tax Act is saying like that? Because if you provide the depreciation for the 11 or 11.5 months, automatically the WDV will get reduced. If the WDV will get reduced, perquisite will be less. Are you really with me? Department is saying that if it is completed, yes, you knock it off the depreciation. Then this 2 lakh will be, sir, compared with 1,60,000. If you are allowing to reduce that 11 months depreciation, this will not be 2 lakh. It will be 1,80,000 rupees or 1,70,000 rupees. Right, sir? Then you will say that for 1,70,000 rupees, I paid 1,60,000 rupees and there is only 10,000 rupees of what? Perquisite. Government is saying that no. For every completed year only, we will allow you to what? Reduce the depreciation. So that is a logic. So for every completed year means how to compute from the date of purchase of the asset, exactly the date of the purchase of the next year. Okay. But reduce 1 day because for the next 1 year, I have to start from the same date. Is it comfortable? So 40,000 rupees is the value of perquisite. A very important adjustment for JAN examination. So if I have taken everything, man, so I have to calculate the gross salary, 6,31,000. Against the gross salary, sir, I am entitled to claim standard deduction of 50,000. So income from salary will be 5,81,000. Comfortable? That is what income from salary as 5,81,000. The other IFOS income has been given in the question. Interest on FD with a company is 7,000. Income from specified mutual fund is 3,000. Interest on FD received by minor daughter as per section 64 subsection when minor daughter income should be clubbed in the hands of the parent who are having higher income. My dear lovable students, when you are clubbing as per section 10 subsection 32, you are entitled to reduce 1,500. And this is possible only if you are traveling through the optional tax regime. Question specifically said that assessee is going to travel through the optional tax regime. Comfortable? So the 2,500 from 4,000, if you reduce 1,500, 2,500, so totally 12,500 will be taxable. So the gross total income is 5,93,500. Because question, compute the gross total income. They don't want the total income. They don't want the tax payable. It should be very clear, very specific. Because this is a standalone question they will be asking in exam. This is actually not a computation of total income and tax payable like a big question and all. This will be coming in the after the 15 mark question. You'll be getting a 6 or 7 mark salary question. Now I will read the question once again. You try to place the things because there are a lot of takeaway in this question will be there, right sir? Miss Priyanka, General Manager of ABC Limited, Mumbai, that Mumbai shows the highest population, metropolitan cities. Sir, furnishes the following particulars for the financial year 23-24. Salary 40,000 per month. That means 40,000 to 12 comes to 4,80,000. Settled. Value of medical facility in a hospital maintained by a company 10,000. Sir, that will not be treated as taxable perquisite because 3 places in India are fully exempted. If you are having any doubt, immediately after this question, you have to go and revise the salary provision. Comfortable? Rent-free accommodation owned by the company. Actually, for our year 23-24, we are very lucky, my dear lovable students. For the first 5 months, we are following one set of RFA rules, and for the next 7 months, we are following another set of RFA rules. Since nothing has been given in the question for the first 5 months, 15% of salary, and for the next 7 months, it is 10% of the salary. Comfortable? Housing loan 7 lakh. Actually, the SBI is providing loan at 9.5%, but our employer has provided 6%. The difference between the RBI rate and the SBI rate and the employer rate will be treated as perquisite. Very easy, simple question. Actually, this is the highlight of the question. Dining table was provided to Miss Priyanka. Provided, sir, provided at her residence. That means that is only for usage. If for the entire 12 months, if it is for usage, very simple man, original cost of the asset, 10% would have been the perquisite. But Priyanka loved that dining table very much. She said that this was purchased on 1/6/2020 for rupees 60,000. This is purchased by the company and sold to Priyanka on 1/5/2023, our year, for how much, man? 30,000. So for the 1 month, usage provisions will be applicable. For the 11 months, sir, transfer provisions will be applicable. Whenever transfer provision will be applicable, as a chartered accountant, you have to see that what asset has been transferred. This asset will fall not under the motor car, this motor vehicle, not covered under the computer and other electronic gadgets. This will fall under other asset. If it is other asset, 10% SLM will be the allowed depreciation to be reduced. Then only you have to calculate the WDV. That WDV has to be compared with the amount paid by the employee. Comfortable? So from that 60,000, I computed how many completed years are there. I got 2 years as completed years. From that 12,000, I knock it off. Balance, I got 48,000. For a 48,000 rupees asset, 30,000 rupees has been paid by the employee. That means 18,000 will be the value of perquisite. Are you comfortable? Personal purchases through credit card provided by company amounting to 10,000 was paid by the company. Oh my God. Actually, it's company's credit card. Actually, it is for the purchase of the company's asset, but it has been used by employee for our personal expenses. And no part of the amount was recovered from the Priyanka. That means this entire 10,000 will become taxable perquisite. A Maruti car, this is the shift or the change in the question. Earlier it was dining table, it will fall under the other asset. This is motor car. For that, SLM will not be applicable. 20% WD will be applicable. Don't stop there. For every completed years, for all the 3, it will be every completed years only. If you have to go and check the provision book, you can see that. For that, I would have done a flower bracket and you would have written that for every completed years. This is the meaning of the completed years. So Maruti car, which was purchased by company on 16/7/2021 for 2,50,000, was sold to SSE on 14/7/2023 for 1,60,000. So when I check that, one day miss aayirukku, that's what, my dear lovable students. So only 20% you can reduce. So from 2,50,000, 20% if you reduce 2 lakh, you will get for that asset 1,60,000 rupees is what paid by the employee. The difference will be treated as perquisite. Interest from FD will be taxable under IFRS. Specified mutual fund will be taxable under IFRS. Minor married daughter, sir, 4,000 has to be clubbed, but when you are clubbing 1,500, don't forget to reduce. If it is optional tax regime, if it is default tax regime, you can't reduce that 1,500. You should be very specific. Are you all really with me? And deposit in PPF made, it is entitled for ATC, but they don't ask total income. They want only gross total income. That's what. So don't reduce that ATC. Whatever you know, don't write in exam. Whatever they want, write in exam. Fine. Compute the gross total income of Priyanka for assessment year 24-25 if she exercises the option of shifting out of the default tax regime under 115 BAC. Comfortable, sir? My dear lovable students, lot of takeaway in this question. A very good question. A similar question is waiting for you in just illustration number 10. A good question. Again, a salary focused question. This type of question will be coming standalone, or you will be getting, this is a MTP September 23 question, my dear lovable students. So what you have to do is, if you are hearing the videos, you are doing a sin. If you are doing the question by your own, you are preparing for your examination. So do it, sit and do, because in order to solve one question, you may take 15 minutes of time. But a huge impact can be created for that 15 minutes. I am waiting here to solve illustration number 10 for you and to say that we have done 10 by 25. Sir, solve illustration number 9. Till that, thank you. Bye-bye from my end. Very, very happy afternoon to all. Sir, we are in the mission of completing 25 questions for in the Jan examination. In that, happily we have completed 9 questions. I am moving into illustration number 10. Mr. Rohit, working as finance manager in ABC Limited, Kanpur. Oh my God, Kanpur. May be used for the population. Retired from the company on 31/10/2023. That means April, May, June, July, August, September, October. How much month? 7 months. So every calculation, income calculation will be for 7 months. At the age of 60, 60, senior citizen. Following amount were received from the employer from 1st April to 31st of October. Okay. Basic salary 30,000 per month. So 30,000 into how much month? DA 20,000 per month. 40% recon from superannuation benefit. So for income calculation, you have to take 20,000. Whereas for the salary definition, you have to take only 40%. Comfortable? Ex gratia lump sum 65,000. It's like a type of bonus. Actually, gratuity is covered under the Gratuity Act. Right, sir? Ex gratia is nowhere covered. Ex gratia, sir, employer himself is saying that, hey, take the 65,000 lump sum amount because you are going to retire. It's like a gift or something which has been given by the employer to the employee. It will fall under a type of commission or bonus. In addition to the above, company has taken a lease, a residential house at Kanpur. This is not owned by the employer. It is taken on lease. Paying a lease rent of 9,000 per month. So basically 9,000 into 7 total lease rent they would have paid. Comes to 63,000. Mr. Rohit, who was paying to the company 6,000 per month towards aforesaid rent, vacated the said premises on 31/10 because after his job, once he retire, company will not give the rent-free accommodation. Right, sir? So 9,000 is paid by the company. For that amount recovered from the employees, 6,000. So 6,000 to 7 comes to balance cannot be treated as perquisite because you have to see the actual lease rent paid or payable or 15% of salary whichever is lower, or actual lease rent paid or payable or 10% of salary whichever is lower as per the provision, right? Company has also provided to Mr. Rohit a cooking range, a microwave oven owned by it. Okay, fine. Original cost of these assets were 40,000 and WDV as on 1/4/2023 is 22,000. Comfortable? Mr. Rohit has 2 sons. His second son was studying in a school run by employer company cost. Cost of such throughout the financial year 2023. Education facility was provided. What of education? In a similar school is 1,800 per month, which is more than 1,000 per month. Once it exceeds 1,000, it is fully taxable. So they are not talking about education allowance. They are talking about perquisite. Employer company was contributing 7,000 per month to central government pension scheme. Mr. Rohit contributed an equal amount. So first it has to be included as perquisite. Then you can claim it as deduction under 80CCD subsection 1, 1B and 2 for all the people contribution. Professional tax paid by the employer is 2,400. First you have to include it as a perquisite. Then you can claim it as a deduction under 16 subsection 3. Subsequent to his retirement, Mr. Rohit started his own business on 15/11/2023. Result of the said business from 15/11 to 31/3/2024 were business loss excluding current year depreciation 90,000. Current year depreciation is what? 60,000. Sir, they were having business loss. Business loss can be set off against any head of income except salary. So you have to see the other head of income. You can knock it off. And current year depreciation will be treated as the business loss. You can add it and you can knock it off. Otherwise, you can carry forward for indefinite period. Mr. Rohit won a prize in TV game show. He received a sum of 2,10,000 after deduction of tax at source to the tune of 90,000. So 3 lakh will be the income. This is casual income against this business loss cannot be set off. Mr. Rohit furnished the undermentioned data relating to savings, investment and outgoings. A life insurance premium with a private insurance company, 30,000 for his son and 20,000 for his married daughter. Sir, ATC, SSC, self-spouse and children. This is life insurance. It is allowed under ATC. Medical insurance premium of 22,000 for himself and 26,000 for his mother aged 82 paid by credit card. His mother is however not dependent on him. Parents dependent or not. First limb and second limb both can be claimed as deduction. Sir, for himself 26,000 since his age of 60 up to 50,000 is allowed. So upper limit 26,000 fully allowed and 22,000 also allowed. Sir, both are allowed. Right, sir. You are required to compute the total income of Mr. Rohit, showing clearly the computation under various sets of income and tax payable by him for the assessment year 24-25. Full income, right? Assume Mr. Rohit does not opt for the provisions of 115 BAC. That means this is an optional tax regime. So I'm moving into computation of total income of Mr. Rohit man. First we are going to calculate income from salary. Shall we? In that income from salary, sir, take your calculator and throw the answer to me. Sir, basic salary, how much is the per month? 30,000. For how much month? 30,000 to 7 comes to There is no doubt for the basic salary. DA, sir, how much rupees per month? Actually, some portion or some percent is for that salary definition, but I am calculating the total income, right, sir? So 20,000 into 7 comes to 1,40,000. Comfortable? Ex gratia means bonus. It's like commission. It's not voluntary payment. Sir, it's not like mandatory like a gratuity. Sir, employer, sir, voluntarily paying that, the 65,000 you keep it, man, because you have worked for this much, sir, period. Right, sir? So 65,000, sir, will be treated as bonus or commission. Comfortable? Now, employer's contribution to central government pension scheme, which is nothing but 80cc. If an employer is contributing on behalf of the employee, first it has to be treated as perquisite. How much rupees per month? So 7,000 into 7 comes to 49,000. Professional tax actually paid by the employer. If employer is paying the professional tax on behalf of the employee, first it has to be included in the gross salary. So that's why 2,400. Comfortable? Rent-free accommodation, man. This is RFA. Actually, this question, sir, can be done in two ways. Number one, either you can take the full 7 months old provision, or full 7 months new provision, or 5 months old provision, 2 months new provision. Comfortable, sir? Are you understanding? But the right answer is for the first 5 months old provision and the next 2 months. What the answer has been given, then I will tell you what you are supposed to do. In case where the accommodation, for example, first one, for computation of perquisite value of concessional accommodation, 40% of DA should take into consideration as forming part of salary. Since the question clearly mentioned that only 40% is to be reckoned from superannuation benefit. Because we all know the definition of salary. Salary means basic salary plus DA if provided in terms of employment plus bonus plus commission plus all taxable allowances. Plus all taxable. Comfortable, sir? So, my dear lovable students, for computation of perquisite value, you should not take the full DA because out of the full DA, only 40% is for the retirement benefits. Clear? So, 30,000 plus 8,000. Actually, DA is 20,000 per month. 20,000 into 40% is come to 8,000. So, total 30,000 plus 8,000, 30 into 7 will be, 38,000 into 7 will be 2,66,000. Plus, there is an ex gratia of, that is for the entire 7 months, right, sir? So 2,66,000 plus 65,000 comes to 3,31,000 is the definition of salary for the purpose of RFA. Comfortable? What they have done is, in case where the accommodation is taken on lease or rent by the employer and provided to the employee, the value of perquisite would be lower of the actual amount of lease rent paid or payable, sir, or 15% of salary, whichever is lower, right, sir, as per the old provision. And actual lease rent paid or payable or 10% of salary, whichever is lower, as per the new provision. So, my dear lovable students, sir, 63,000 being 9,000 into 7. What is 9,000? Lease rent. Actual lease rent paid or payable. Look at the question. Employer is paying per month how much? So, 9,000 into 7 come to 63,000. This is what actual lease rent paid or payable. Comfortable? Or, as per the old provision, 15% of salary. And as per the new provision, 10% of salary. And 10% of salary, which is nothing but just now we calculated salary, 3,31,000 into 10% come to, sir, so whichever is lower you have to take. You tell me 63,000 or 33,100. 33,100. Comfortable? So this value should be reduced by the rent paid by the employee. That means any amount recovered from the employee. Employee is paying how much per month? So 6,000 into 7 comes to 42,000. So the value of concessional accommodation is nil. But we got an amendment in our Finance Act. 2023-24, sir, they are doing like that. For the first 5 months, it is 15% of the salary. And for the next 7 months, 10% of this. So as per the amendment, it is actual amount of lease rent paid or payable by the employer or 10% of salary, whichever is lower, as reduced by the rent paid by the, this is for the next 7 months. Comfortable? So if you want to take two things separately, then also you can take 2 months. That is NSR 5 months and 7 months. I have worked out for you just for the reference purpose. Sir, RFA classified in 2 categories. First 5 months and next 2 months. Because actually 7 months are there, but in our question effectively, so actual lease rent paid or payable or 15% of salary, whichever is lower, right, sir? Actual lease rent is 9,000. 9,000 into 5 comes to 45,000. And sir, or 15% of salary. Salary means basic salary plus DA provided in terms of employment, plus bonus plus commission plus all taxable allowances, right, sir? per month basic salary is 30,000. DA actually 20,000. Adoda 40% come to 8,000. Sir, you can call ex gratia as either bonus or commission at your call. No problem. So 65,000 they have totally paid for 7 months. So 65,000 divided by 7 into 5 comes to 46,430 you will be getting round off. Are you all really with me? So divided by 5 means every month it is 9286 comfortable. So the per month salary will be 47,286 is the salary for the first 1 month. Into 5 months is our period, RFA period. So 2,36,430 is the definition of salary for the first 5 months. Are you getting it? Into, sir, 15%. When I can take 15% if it is for the entire year. But that is not for entire year. It is only for 5 months. Comfortable? So 2,36,430 into 15% into 5 by 12 comes to, it is come to only 14,776. What is the provision, man? Actual lease rent paid or payable, or 15% of salary, whichever is lower, which comes to whichever is lower is 14,776. But for 14,776, employee has actually paid 6,000 per month for 5 months, so 30,000. Then the RFA will be nil. There is no concession for the rent. Comfortable? The same you can calculate for the next 2 months also. Actual lease rent paid or payable or 10% of salary, whichever is lower. So 9,000 into 2 comes to how much, man? 18,000. This is the actual lease rent paid or. Then coming to the, sir, 2 month salary, 30,000 per month, 8,000 per month, 9,286 per month, total 47,200 and into 2 come to 94,572. Comfortable. Into, sir, how much percentage? 10%. But I can't take 10% for the entire year because that is only for 2 months. Into 2 by 12 comes to only 1,576. For that, the employee is paying how much rupees? 12,000. Again, the perquisite is become 0. So either if you want, you can do that and you can write it as a note. But examination, this is the most acceptable method. That is first 5 months treated separately and next 2 months treated separately. Comfortable, sir? So my dear lovable students, under both that you are getting the RFA as what only? 0 only, nil only. So that's what they have given here. Concessional accommodation is nil. I'm proceeding, man. Next one, value of furniture. I'm going to calculate the value of furniture. Number 3. So the value of furniture owned by the employer and provided to the employee is how much percent? 10%. Per annum of the actual cost, which amount to 2,333. What is the actual cost of the asset? You look at and 40,000. Calculator, man. 40,000 into 10% into 7 divided by 12 comes to 2,333. Right, sir? So the value of furnished accommodation will be 2,333 plus 0. Because for unfurnished accommodation, the value is 0 you got. And for furnished accommodation, 2,333 provided to the employee. It is also possible to consider the cooking range and microwave oven provided by employer to the employee as perquisite on account of usage of what asset? Of an employer by the employee. Even if it is so assumed, there will be no change in the answers. In such a case, the perquisite value is 10% of the what cost. Either you can take it as rent-free accommodation. Either என்ன பண்ணலாம்னா இந்த cooking range-ஐயும் microwave-ஐயும் unfurnished accommodation-ஓட value கூட என்ன பண்ணலாம்? Add பண்ணலாம். Then you will get the total RFA. Or if you don't want to consider there, you want to treat it as usage of the asset, then also 10% of the original cost only provision, then also answer will not change. Comfortable, sir? Both are allowed. That is based upon your interpretation, right, sir? So value of furniture is 2,333. Either you can add along with this, then it will become RFA, or you can show that as usage of the asset, man, movable asset. So value of concessional education facility, sir, actually, is it exceed 1,000 rupees? Once it exceeds 1,000 rupees, it is fully taxable. So 1,800 into 7 come to 12,600. 12,000, fantastic to the core. Concessional educational facility. So you will get a gross salary, man. Gross salary comes to 4,81,333. Right, sir? Sir, look at here. Sir, in determining the value of perquisite resulting from provision of free or concession education facility, from a plain reading of the proviso to 3.5, it is apparent that if the cost of education per child exceed how much? 1,000 per month, the entire cost will be taken as value of perquisite. Accordingly, the full amount of 1,800 per month will be taxable as perquisite. In case value of perquisite would be 12,600. Sir, actually alternate view is also possible. In the sense means, since it exceeds 1,000 rupees, only that extra 800 rupees will be taxable. But that is not, sir, so much acceptable version. Once it exceeds 1,000 rupees, the entire amount is taxable. When I am saying this, I will tell you, man, sir, look at here, man. What is the definition of salary? Are you remembering what is the definition of salary? Basic salary plus DA if provided in terms of employment plus bonus plus commission plus all taxable this is not allowance, this is perquisite. That is why this amount has not been taken into account when you are calculating the RFA. Are you understanding? This is not allowance, this is perquisite. Are you all really with me? So always it is better to do RFA at the end of the question, because at the end only you will know what are the taxable perquisites. Comfortable? So treat RFA as a last line item, then you will never make mistake. Here, since this is, sir, perquisite, we escaped. But if this is what? Allowance as not swaha, entire calculation would have been gone. Clarity? Because the definition of salary would have been changed. Comfortable. So, gross salary will be 4,81,333. Less standard deduction 50,000. Professional tax, this 2,400 can be claimed as deduction. 52,400, you will get the net salary of 4,28,933 as the net salary. Comfortable? Is there any house property? No, sir. Is there any PGBP? No, sir. Is there any capital gain? No, sir. Sir, actually, there was business loss. That business loss cannot be set off against salary income. So, that has to be what forward? Sir, now I am going to finalize the income from other sources. Shall I? Very easy, man. Winning from TV show, 4 lakh, 2 lakh, 10,000 rupees is the net. At TDS, 90,000, total 3 lakh. So, income from other sources comes to how much lakh? 3 lakh. Now, the gross total income is 7,28,933. Less chapter 6A deduction. Sir, can we reduce one by one chapter 6A deduction? Yes, sir. This is what computation of chapter 6A deduction. Deduction under 80C, LIC, you are entitled to get 50,000 rupees. Right, sir? 80CCD subsection 1B, that is additional employees contribution to pension scheme. How much? 49,000. First, you can claim 80CCD subsection 1B, then you don't have the headache of 80CCE. Right, sir? Deduction under 80CCD subsection 2, whose contribution? Employers contribution. In whose hands? Employees hands. Correct, sir? But it will be restricted to how much percent of salary? Salary means basic salary plus DA provided in terms of employment. Right, sir? Which come to 26,600. How? I will tell you. What is the basic salary per month? 30,000. What is the DA per month? 20,000 into 40%. Come to 8,000. That comes to 38,000. Into 7 comes to 2,66,000. Into 10% come to, this is what 26,600 is all about. Comfortable? So deduction under 80D, medical insurance premium, both can be claimed as deduction, 48,000. So the total chapter 6 will be 1,73,600. That's what 1,73,600. Getting it? So taxable income will be from the gross total income. Knock off the chapter 6A, 5,55,333 will be round off to 5,55,330. Now you have to calculate the tax payable. Shall I? On winning from, sir, special income 3 lakh rupees, 30% will be how much? 90,000. Tax on balance income of 2,55,333, which is nothing but 5,55,330 minus 3 lakh comes to 2,55,330. 2,55,000. Sir, basic assumption limit for a senior citizen is how much? 3 lakh. And up to 3 lakh varakum tax katta vendiya. That means other income ennave varadna tax varad. That means on this 90,000 you are supposed to pay tax at the rate of 4%. Come to 3,600. So total 93,000. But already TDS has been deducted under 194B to the extent of 90,000. So the net tax payable will be 3,600. Comfortable? The balance note, sir, you can read it, man, because I have explained that. Patuko, I will read the question once again. What a brilliant question this is. I will read the question once again. Mr. Rohit, working as finance manager in ABC Limited, Kanpur, retired from the company on 31/10/2023 at the age of Euro. Following amount were received from the employer from 1st of April to 31st of October. Basic salary 30,000 per month. So basically 30,000 into 7. DA 20,000 per month for income purpose 20,000 into 7. But salary purpose 20,000 into 40% into 7. Comfortable? Lump sum ex gratia for 65,000 will be treated as a bonus or commission at your call. In addition to the above, company had taken on lease a residential house at Kanpur, paying a lease rent of 9,000 per month for Mr. Rohit, who was paying to the company 6,000 per month towards aforesaid rent, vacated the said premise on 31/10/2023. That means, my dear lovable students, sir, for the first 5 months, actual lease rent paid or payable, or 15% of salary, whichever is lower. For the next 7 months, actual lease rent paid or payable, or 10% of salary, whichever is lower. That's it, game over. Company has also provided to Mr. Rohit a cooking gas range and microwave oven owned by it. Original cost of these assets were 40,000 and WDV on 1/4/2023 was 22,000. My dear lovable students, sir, this can be taken as either part of rent-free accommodation or you can take it as usage of the asset. Both the provision will give the same answer. Mr. Rohit has 2 sons. His second son was studying in a school run by employer company cost. Cost of such is, sir, 1800 per month. So in excess of 1000 rupees since it is fully taxable. So 1807 will be the taxable perquisite. The employer company was contributing 7000 per month. Central government pension scheme, Mr. Rohit contributed an equal amount. So 7000 into 7, sir, 49,000 first should be included in the gross salary and that can be claimed as deduction under 80 CCD subsection 2 to the extent of 10% of salary. Their basic salary plus DA if provided in terms of employment will be the definition of the salary. Professional tax paid by the employer is 2,400. Professional tax paid. Right, sir? First it has to be included in the gross salary and can be claimed as a deduction. Subsequent is retirement. Sir, business loss was there. Sir, business loss has to be what forward? Carry forward. Because business loss can be set off against any head of income except salary. So against salary you can't touch it. Actually there is no other head of income except IFOS. But in IFOS you are having casual income. Casual income you can't do the set of provisions. Right, sir? So this is what the casual income IFOS total 3 lakh should be included. Life insurance 80C can be claimed. Medical insurance 80D can be claimed. That's it, man. This is what the flow of the question. When you are reading the question for the first time, here and there you will be having confusion. But when you are getting the explanation and if you are going through, this is such a simple question, man. And I will tell you one more thing, man, my dear lovable students. When you are doing this question again, the level of confidence will be very level. Always there is a difference between hearing the question and doing the question. Because doing the question will settle all the doubts. And I will tell you, if you are able to solve at least 10 questions, that is the first 10 question, then, sir, and the remaining question you can do audit also, no problem. In the sense means, okay, extra adjustment, this is what the extra adjustment is all about. If any takeaways are there, that amount, that alone you can what? Adjust. I will tell you, I'm not going to read illustration number 11. You just read it. Winning from a TV game show, net 77,000. Under what head you will be taxable? IFOS. Whether it is net or gross. Whether net or gross will be taxable. Gross will be taxable. And you will calculate the tax and final tax payable on the TDS minus one. Same adjustment. Start repeating. That's what I'm saying. Gift received from father's brother. Father's brother is what? Brother or sister of the either of the parents of the individual. Relative. 85,000. It is 56 subsection to class 10 will not be applicable. Gift received from Archida or close friend. 80,000. Fully taxable. Because friend is not a what? Relative. Like that provisions will start, my dear lovable students, repeating in the coming question. If any 1 or 2 adjustment will surely be there as new things. Sir, this is RTP May 2020 question. Don't worry. In the coming slot as 11th question I will solve for you. Sir, and 12th question, the again salary question. Sir, basic salary 1,70,000 per month, DA form part of retirement benefits, commission, transport allowance, medical reimbursement. Raghav has resigned on this month after completing 10 years and 5 months. He was paid gratuity of 25 lakhs. So like this, sir, question will be there. He was holding 30% equity share, sold all the shares, capital gain, interest on FD, IFOS, deposited 1,10,000 in PPF ATC. There was no change in salary and CAA has been given. This is an RTP May 2021 question. A very big question. Sir, when you are doing these questions, this 25 question, it is equal to preparing the first 30 mark, which is the, sir, case study and also the MCQ part. Because the same computation question will be fixed in the first 3 questions as the computation of the total income, computation of the tax payable and all. Hello, sir? So, at least 10 question has to be solved with your hands, my dear lovable students. Then you will start a lot of familiarity in the question. There are 2 options are there. Either you can fear and you can say that, sir, this much big questions are there, what I have to do. Or you can enter into the actions. The action is start doing the question. You have to choose what you want. With this, my dear lovable students, out of 25 questions, we have completed the second target of 5 more questions. 10 by 25 is the target. I am with you, sir, from your heart. Anybody is there? Where is a grand clap?